Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's scheduled events for Thursday, May 12th. Well, the Bank of England Monetary Policy Committee meeting will take center stage today. There's no question about the outcome of the meeting. Another 9-0 vote to keep policy unchanged is about as certain as things get in the financial world. Attention will therefore focus on the tone of the minutes and, more importantly, the revised forecast in the inflation report that comes out at the same time. There will be a press conference with Governor Carney following the publication of the report. The minutes to the last MPC meeting in April said that the data were likely to prove harder to interpret than usual because of the unsettling impact of the EU referendum, the Brexit referendum. That's all to the good because the news has been largely negative since then. The April PMIs were all well below estimates, with the manufacturing PMI actually slipping below 50. Yesterday's March industrial and manufacturing production figures also missed forecasts, with output continuing to fall on a year-on-year basis. On the other hand, there are some signs that inflation is gradually accelerating. This makes for a difficult policy mix. Now, until the referendum is over, the Bank of England is likely to maintain a cautious stance. I'd expect them to lower their forecast for growth today based on the disappointing statistics since the last forecast in February. Now, coming after Wednesday's disappointing production figures, news like that would be likely to depress sterling, in my humble opinion. The only major statistic out today is EU industrial production. But as the figures for Germany, France, Spain, and Italy are out already, this is unlikely to provide any surprise. Even just a simple average of those four countries' figures gives a fairly good estimate of the EU-level number. Aside from the data, there are a number of speakers from the Fed, one from the ECB, and Bank of Japan Governor Kuroda. Now, the three Fed speakers are all pretty hawkish, particularly Kansas City Fed President George, who was the only person to vote for a rate hike in April. I'd expect these folks to echo New York Fed President Dudley's recent comments that it was reasonable to expect 2 rate hikes this year. So many FOMC members lining up on that side could start to change market perceptions about the Fed, which would be positive for the dollar. Now, since the April FOMC meeting, the market has further reduced its forecast for the path of Fed tightening by almost 20 basis points in the future, which is nearly half a rate hike, a substantial change in forecast. Reversing even just that change would be likely to boost the dollar. As for Bank Governor Kuroda, he already appeared before a parliamentary committee overnight. There's no indication what he'll be discussing in his speech tonight, Friday, Tokyo time, so we'll just have to wait and hear. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.